he sold every stock he owned except for one. And he's now betting against some of the market's biggest names, including NVIDIA and some of the Chinese tech giants that he bet in favor of very recently. Does Burry see something on the horizon that almost everyone else is ignoring? And should you be concerned? So let's break that down. Now, this is his current 13F. This was just announced yesterday. Guys, he sold everything in the last quarter except for Estée Lauder. He added to it. Mike, if you remember, he was a buyer of Baba, sub 80, sub 90 on Baba, actually maybe sub 100, and he has probably made a killing on that one. But these other Chinese tech firms, he sat there and he emptied everything, but he's betting on Estée Lauder. Now guys, let's look at Estée Lauder, his one holding, to show the difference between how people think. Right here, we got a company that's revenue growth in the last 5 years is down, net income is down $2 billion, free cash flow is down $1 billion, the 5-year PE is 22. The 5-year price to free cash flow is 22. The 5-year PE is 20. I look at this going, man, and a lot of debt. I'm avoiding this, but he sees something. He digs into the details. That's my point. Everybody views things differently, but we're still like-minded thinkers in how we look at things. We still believe we want to buy something for less than its value. That's what investing is. That's what value investing is. Now, guys, as a principle-driven investor, you've got to remember that the price changes everything. So look at this, for example, this Alibaba. He bought Alibaba and he sold 100% of it. Why? Well, when he was buying Alibaba, it was falling all the way to like $65 a share. It got up to 145 or so. Remember, guys, this price is different than this price. Value is not about just the story. It's about the price you're paying for that story. Price versus value. What we're trying to teach is you buy when price is below value, and if you choose to sell, you want to sell when value is above price. Did he see that here? We don't know the exact date he bought and sold. That's the thing about 13Fs. You just know they did it during the quarter. We don't know the exact timing of everything. But it's really important to take these lessons from these guys. Now, sometimes they sell very quickly. And it's kind of like, hey, if you're a long-term investor, but Burry's always said, Burry's not like Buffett. Burry's always, his MO is, I buy a company, I sell it when it hits value. Remember, he was a buyer of GameStop at $5 per share. He sold it around $20 or $25 per share. It went on that huge run. But for him, he looks at it and says, hey, if I love something at 5 and I think it's worth 15, it's not a good investment at 20. That's what an investor does. That's what a principle-driven investor does. That's what I want you to remember and think about and ingrain in your brain. That'll be so different than everybody else out there. A great idea at the wrong price is a bad investment. You've got to remember that a great property, a great company, at what price does it not make sense? Because if you think there is no price that doesn't make sense, you're speculating. But if you think that a great idea at a certain price doesn't make sense, you're probably an investor. And if that doesn't make sense to you now, I get that. It didn't make sense to me a while back. But these are why we go over these basics over and over again. This is why we have to repeat these things, because even though they're simple, it's just like Steph Curry. Steph Curry, best shooter in basketball history. When he starts practicing, every single day, he starts from 3 feet away to get his basic motions in place. Same thing here with investing. We don't start at the half-court line trying to drain shots. You start with the basics and remind yourself of the basics. Just remember, whenever sports teams get a little out of funk, what do? Let's get back to basics and start rebuilding from there. That's what I want you to remember when you sit there and talk about investments and learn from these investors. When they exit, they're saying either my thesis changed and or the stock price went up so much that it's worth more than what I think the value is, so they move on to something else. Now, here's what's interesting. Yes, his stock portfolio only has one position in it, but he's done this in the past. These are his puts, guys. He has bought a lot of puts. Now, what does buying a put mean? Essentially, to keep it simple, he is betting short. He is making a bet that these stocks will fall. He's done it for NVIDIA. He did it for Baba, PDD, JD, these Chinese companies, Estée Lauder. Interestingly enough, he has increased his position at Estée Lauder to bet against it. Now, I wonder if he's hedging, or this could be he sold puts. If you sell puts as a value investor, you're being paid to buy the stock at much lower prices. And since he owns them and also has increased the position on them, he might be trying to get more shares at a lower price. Baidu, guys, I look at this going, okay, he's a great stock picker. His track record is incredible. When he was in medical school or as a resident in medicine, he had a blog, and some greats, including Joel Greenblatt, would see his posts and say, who the hell is this guy? This guy is really good at picking stocks. So when Burry is betting against companies or betting in favor of companies, it's something to really understand. And he's done this in the past. If you remember, he did it with SPY and QQQ and other big names that he was betting against. I think at one point in the past, he even did NVIDIA before. Sounds like something I've done. And the bull market absolutely went crazy. So of course, the question is, how often does he get it right or wrong? Well, just like most things in life, we tend to focus on the things people get wrong. And we're all guilty of doing that. But remember, your job isn't to copy Michael Burry. Your job is to understand his thinking, understand his logic, understand his thought process, because you need to learn how he thinks because he's a great investor. But don't do the same things he does. My understanding of him, he's got plenty of money, so he can take some different approaches to different investments and be fine if they don't work out. Now, are these tactical shorts or are they a broader market warning? He doesn't talk to the public, guys. He doesn't sit there and do this idea of saying, hey, here's my thought process. Here's why I did this. He's not here to justify anything. In fact, a couple of times he said, sell everything or something along those lines. And the market just kept going up. Why? Very strong bull market. But he's using options. And I think even in Estée Lauder, he might be using these options to get shares at lower prices. And that's something that we do on this channel a lot, in addition to covered calls. So basically what we're doing is we pick a company that we love and we say, hey, it's selling for hypothetically $100. Well, I want to buy it at $90. Guess what? There's a way I can make 10 or 15% on my cash waiting for the stock to fall. That's pretty impressive. I love doing that. If that's something you're interested in learning about, click the link below. We will email you our PDF that explains that to you. Also, how to rent out your stocks and generate income on them over time. It's a great way. It's something that I started doing 5 years ago that I wish I'd done 25 years ago. That's how important it's been for me. And I've absolutely loved every second of it. And it's absolutely changed the way in which I invest because of that. Now, you have to remember, these 13 Fs are fun to look at. A 13F is the filing that these big investors have to give out and say, hey, look at this. Look what we did. It's a good thing. At a certain dollar amount, they have to disclose these. But you got to separate a lot of these things. Remember, they look at the world different than you do. Their goals are different than your goals. We still encourage people to have dollar cost average and a low cost ETFs. And if you want to pick individual stocks, take a portion of your portfolio and start buying individual stocks. The great thing about cash secured puts and covered calls is it can keep you busy generating money today. That way you don't make frivolous, stupid moves trying to force returns. Principle-driven investors always have to remember the 5 tenets they have. The tenets of we're investors, not speculators. Every investment's the present value of all future cash flows. If you don't understand it, you don't invest in it. Doesn't mean if you don't understand it, you don't try to learn, but learn before you invest in it. Fourth one is, in the short run, stocks are a voting machine. In the long run, they're a weighing machine. And that has hurt Burry in the past when he bet against the market. And the fifth, the most important one, a great story can become a bad investment if you pay the wrong price. If Burry's actions raise some red flags for you, you need to hear what Warren Buffett said. Because while Burry's hitting the brakes, Buffett also had a message about the future of the stock market. He always talks about the future of the US, and if you're betting in favor of the US, you bet in favor of the stock market. So you need to watch this next video on your screen, and I'll share with you what he actually said about the markets. Thank you for your time.